All right. Good morning, everybody. It is the middle of August 15th already, and we've had a very eventful couple of weeks in the mortgage markets in particular, in the macro economy in general, but really impacting bond yields and the mortgage rates. And we are looking for signals of change in the data. What does the fall look like? We have some insights to the fall. And so we're going to dive into as much of that as we can today, the current data and the leading indicators. And if you follow the weekly videos where we review the latest data every week, you might have noticed a slight shift in my optimism, pessimism. Like I'm starting to wonder, are we going to get any buyer demand lift this year? And so I'm going to spend a little bit of time talking about that and what that means for us talking to people who need to know right now. And of course, at Altos, we track every home for sale in the country every week, all the pricing, all the supply and demand, and all the changes in that data. And we make it available to you before you see it in the traditional channels. So what we're going to do today is look at the latest and what it tells us about the near future. Before we dive in, Lael and Jeff from Altos are in the chat. Use the chat today. Let us know where you're connecting in from, but also when you have questions along the way, I don't have a moment to stop and answer them until the very end, but Lael and Jeff will drop links in there that you can click through to, as well as try to answer some of those questions along the way. The webinar is recorded, so everybody who is registered here will get the recording later on today. And so you can always watch it later and catch up. Okay, before we dive into the data, I always like to remind folks, if you are new to Altos and you don't already have the ebook, How to Use Market Data in Your Real Estate Business, I recommend that you just go get it right now. Lael and Jeff will post a link to that in the chat. It is a free ebook. It talks about the data. It talks about how to think about the data and the scripts and all of the things that I cover today are covered in that ebook. So I recommend you go get it and use that in your business. The other thing I want to remind people about before we dive into the data today is, if you aren't familiar with the Altos podcast, the Top of Mind podcast, I'd love for you to go check it out. We do deep conversations with really smart people in the real estate housing market. These are people that approach the data and the industry with different expertise than I have. So I basically have these conversations so I can learn. We have two really good recent conversations. Out yesterday is Salim Firth from Mercatus Center, and we talk about housing policy, what's going right, what we must do in this country to solve so many of the critical problems. You may have heard about how there are estimates that we've underbuilt homes, maybe 2 million or 3 million or 5 million. Salim, in this podcast, he cites evidence, research that says we may be 20 million homes underbuilt. If that is interesting to you and what that means for the country, check out that most recent episode of the Top of Mind podcast. We also talked forecasting with Terry Loebs, and that's a really cool view about how to understand what we can and cannot predict in housing. So we do that kind of stuff. We release 2 or 3 of those a month. I encourage you to go check those out and give it a listen. And if you are a fan, I'd like if you would give us some reviews. A few stars makes it really helpful for other people to find the podcast. So 5 stars on wherever you listen to your podcast. I really appreciate that. All right. So today, questions that really are important at this juncture in the market. Mortgage rates have come down. They came down really 2 weeks ago, and then even actually rose a little bit last week. The question is that enough to motivate buyers? maybe it's not enough. Maybe they haven't fallen long enough. And so we're looking for signals that maybe buyers will finally be motivated. Um, on the other hand, we've had supply growing, of inventory growing all year. It's growing in all 50 states. And so the question is, how is that going to keep growing? Which are the ones that states we should pay attention to most? We're going to dive into that today. Prices. So supply is up, demand is down. We really need to keep our eyes on, are there any signals of price declines? And I'm going to show you some regional, local places where we can actually see prices ratcheting down and some markets where it's not. And I'll show you some of those views today. I have a new view on prices for us today. Any signs that we're going to get sales finally ticking up? And then, of course, we spend the last chunk of the webinar in the local markets. I can't get to all local markets today, but if you want to dive into your local market with the Altos team, we cover every zip code in the country. So go to the Altos Research, go to altosresearch.com, book a free consult with our team. We'll talk about the data. We'll talk about how to use the data in your business, and we can look into your local markets. All right, let's dive in. Let's start with mortgage rates today. So mortgage rates are at basically their lowest point for the year. They started the year at about 6.5, 6.6. And in this view here, each line is a year, and you can see the distribution of where rates spent their time in the year. Most of 2024 at the bottom of the chart, the fat part of our little distribution, so each dot is a week. The fat part is higher. Most of the year we've spent higher than most of 23, and of course higher than any point in the last decade. And now we're at the low end of the year. We had one reading a week ago at with the 30-year fixed at 6.47. It's a little higher than that today, 6.5, 6.6 right now. And so this is where I'm asking the question, is that enough to motivate buyers? So on the one hand, rates are significantly higher than they've been in years. Payments are still very expensive. On the other hand, if you've been shopping this year, you've been shopping at 7%. Now suddenly rates are at 6.5%. Maybe that motivates you to buy. Maybe that motivates you to take action. Most buyers aren't super dialed into every little move in mortgage rates. So it may take a few weeks there before buyers realize like, wow, maybe there's a good opportunity. And so I've been saying that 6.75 to 6.5 would be a threshold where we'd start to see marginal demand pick up. We'd see more new pendings. We'd see inventory start to tighten a little bit. We haven't seen it yet. Now, maybe that's because 6.5 is not, it's the threshold's too high. Maybe I overestimated that. Or maybe we just haven't, we really only had like one little weak dip there. And we need to see the second half of the year persistently lower. Maybe if we get lucky and the Fed lowers rates in September, maybe that drops the 30-year down. So mortgage rates, maybe they fall under 6.5 in the second half of the year. So that could bring some demand off. I think it's interesting to note, you look at the 2023 line here, that long tail to the right of the chart is the second half of the year. So the lowest point of mortgage rates in 23 was January, February, March. Rates started climbing, and that way super high 8% was all the way in November. So the second half of last year is where demand really slowed down. I thought we were going to get a pickup in the first half of this year, but rates did not. Rates persisted around upper sixes or over 7% so much of this year. So maybe we're going to get lucky, and that'll keep a cap on inventory for the second half of the year, and we'll see some transaction volume kick up. I've been saying it's going to be right where we are. I haven't really seen it yet, so I keep testing the hypothesis of whether I'm right. We'll see in the next few weeks if that's how that plays out. But that's the number to keep our eye on. My assumption is still that this rate, 6.5, will be a threshold where we get marginal demand pickup. It's the second half of the year though, so we're already in the downside of the season. Maybe we've missed our window and it's really a 2025 window before we see those sales pick up. That's what we're watching for with mortgage rates here. So inventory, total inventory, there are currently 693,000 single family homes unsold on the market. That's 41% more than last year at this time. And in this view here, the bright red line is last year, the dark line is this year. Inventory was climbing and continued to climb late in 2023 to peak in November. Rates were rising through the second half of 2023 to peak in November. And so if we are lucky and rates have peaked and they're easing back down, then we could see inventory start to decline or plateau in the next few weeks to decline, maybe starting in September or a few weeks earlier this year. So inventory right now, there are 41% more homes on the market unsold than a year ago. I continue to expect that it will end the year at about 20% more homes unsold than we ended 2023 because inventory grew so much so late in the year last year. And if we're lucky, the falling rates now create some of that demand and allow us to keep a peak on inventory. So inventory is up in every state around the country. And in fact, let's look. Inventory is up year over year in every state in the country now. New York was the last one. So New York has 10% more homes on the market unsold now than a year ago. But, Florida has 70% more. Arizona has 70% more. There are now 7 states which have more unsold inventory than in 2019. So that is Texas and Florida, of course, but also Oklahoma, Arkansas, and Alabama. And then in the West, Utah and Idaho have slightly more homes unsold now than a year ago. And in fact, the next 2 that will probably fall there are Colorado and Tennessee, have just barely fewer homes on the market now than the same week in 2019. So Colorado and Tennessee are next. So by the time we do this view next month, we'll probably have 9 states with more unsold inventory than in 2019. And so some of these states are just fractionally more, and some are just fractionally less than 2019. Every state in the country inventory continues to climb. We have not really seen a plateau yet, although I think in Texas the momentum has seen its plateau for the year, and in fact, so Texas has 46% more homes unsold now than a year ago. Last month it was 49% more. So that margin is compressing. And as we look at the overall country, that's where I see the margin will compress through the end of the year. So Texas has turned the corner. Florida, Arizona haven't yet turned the corner, but maybe by next month they will have, and we'll start to see that compression. So inventory is growing. Inventory is normalizing in a bunch of states back to pre-pandemic levels. Much of the Midwest, Northeast is still at very low inventory levels. So overall, it's going to be hard to see that normalizing, see that as a country getting too many homes for sale. One of the things we've had a bifurcated market. So the Sun Belt has had a lot of inventory growth where the Midwest, Northeast has had very few. As Texas starts to slow down and New York and Minnesota and Michigan, Ohio is starting to catch up. So the country is evening out with its inventory gains now. And when we look at months of inventory, though, as I mentioned, as inventory grows and demand has not grown, the months of inventory, so these are the rate of sales, is growing in basically every state around the country. Texas was at 3.6 months last month, and now it's 3.8. And, so we can see all of the states, months of inventory is growing. You can see the darker the blue, the more months of inventory there are. No states are really a lot. Like this is not a really, like it's surprisingly slow market because we still don't have a lot of homes for sale. These are just, some of those Sunbelt states are back to 2019 levels. They're not nearly back to 2014 levels or of homes for sale. So, but we can see months of inventory is still climbing. It's the second half of the year, so inventory can climb while demand is ticking off. So it's not a surprise that months of inventory is climbing, but it's still climbing. So something to keep our eyes on there. Louisiana with 4.3 months of inventory is, and this is what we're doing here is we're tracking the new pendings each week. So the homes that are going into contract compared for times 4 for the month compared to the total inventory, and how many months will it take to sell through the current levels of inventory. So months of inventory is climbing. Ohio is at 1 month just recently. So now it's 1.2 months. So you can see it climbing everywhere across the country. New listings. So this week, 75,000 new listings unsold. Actually, a little uptick in new listings this week. It's the most for the year. I expect it to tick back down. We can get a little noise, a little bounce in that new listings trend. What we still have is we still have dramatically few listings. And if you compare to normally for this time, 80,000, 85,000 single family homes on the market. Second half of the year, it starts to ease back down. And I expect us to ease back down in the second half of the year, like all the gray lines down there. If in the next few weeks, the new listings remains elevated, that would be a signal to keep our eye on. I don't think it's going to happen, but it would be, it would be a different signal from what we've had in the last 2 years. In the last 2 years, it has been sellers are restricted. Sellers are perfectly happy not to sell if they think they're not going to get what they want. They pull the house from the market. They never list in the first place. And you can see in the middle of 22, right in the July, that the pink line had that big drop in sellers after June of 22. So in 22, if I wanted to sell my house in 22, I knew that I had to get it to market by June because mortgage rates were rising. By July, I knew I'd missed my window. So as a seller, sellers backed way off, and that you can see the lines fell way fewer than normal. And that was a signal to us at the time that's saying that we're not going to get a flood of inventory. We're not going to get super out of balance. And as a result, 2023 started with very low inventory, and when rates were adjusted down a little bit, people bought. And the beginning of 23 was surprisingly strong. Second half of 23 was weak because rates hit 8%, and we really have not yet resumed any benefit, any of that like buyer momentum. So on the new listing side, new listings remain restricted. We had 1 week of uptick, probably a bounce noise in the data. But we're going to keep our eye on that and watch the weekly videos with us each week to we're going to track and see, is the trend changing? I don't expect that it is, but we're going to keep our eye on there. So let's put those all together and talk about the projection, the forecast for inventory for the year. As I mentioned, we're forecasting that inventory will end the year 20% higher over 2023. It's now 41%. So we're going to see compression in that change. And as I mentioned, some of the leading states like Texas is compressing already. So Texas is at 46% more homes on the market than a year ago. Last month, it was 49%. So we're going to see if Texas starts coming down. Texas has the most homes in the country, has the biggest impact on the sales, the inventory, all of those numbers. And so if Texas has hit a plateau, that will make sense for this projection to stay relatively where we're expecting it now. If rates are to jump again, let's say we get between now and September, when the Fed meets next, we get really strong economic data. We had actually some strong data today. Retail sales are strong. Some of that data was strong today. And so if economic data is strong between now and September, it could be that the Fed doesn't cut rates in September. If that happens, mortgage rates could jump in response, and we could be again at a higher rate in mortgage rates in September and October than now. So mortgage rates could go up from here. And I don't forecast mortgage rates, so I don't know if it's going to happen or if it's not going to happen, but it could happen. And if it does, you're going to see the same pattern that we saw in 22 and 23. And you can see right here in the gray line of 22 and the dark red line of 23, the inventory started climbing late in September, October, November, those 2 years, last 2 years, because that's when mortgage rates jumped the most. So if mortgage rates jump the most for the year, again in September, we'll have exactly the same jump. We will revise this forecast up, but if we're lucky, rates stay where they are, rates fall, continue to fall for the second half of the year, then we have a much flatter forecast, and we'll end the year with 625,000 or so single family homes. That'll be about 20% more than 2023. And then we would start the year, we'd start next year with a little more inventory. And if rates are on the downside, maybe that gives 2025 some momentum for finally increasing home sales. That's what we're looking at for the forecast. Let's switch to the pending. So these are the sales now. So the new contracts, so there's 70,000 new sales pending last week. There was a little uptick in the data last week. Maybe that's as a response to newly lower rates, slightly more. Like the new listings, it's probably going to dip back down next week, and so we'll be back under the 22 level. If we're lucky and consumers are responding to lower rates and rates tick down from here, then we'll start to see in the second half of the year, the dark line 24 come in above the pink line from 22 and show some sales gains. But it's just really 1 week of data, and I expect it to bounce back down next week. You can see you get week-to-week jumps in the data. And then later in first week of September, you have a holiday week. So you can see the dip there. We'll have a few of those on the way out. If we're not lucky, then this line comes back down. In the last few months, the sales rate for 24 has been at or below the sales rate of 23. This is really just like a 4 million home sales for the year. If you listen to the NAR numbers, they talk about their seasonally adjusted would be about 4 million. So you come in at 4 million home sales, and we haven't really moved beyond that. In the first half of the year, I expected us to, but then May, June, July, we lost all of that momentum. And so we had an uptick this week to 70,000. It's probably going to just, dip back down next week, but it is definitely something to keep our eye on. If rates say ease under 6.5, and there's a few consumers out there who are like, wow, a few $100 makes that difference on my payment, and I'm going to make an offer on the house, maybe we get a little sales momentum in the second half of the year. On the other hand, maybe it's too late in the year, and anybody who is a potential shopper has hung it up for the year and is going to wait till the spring. So I've been in recent weeks, I've been a little discouraged. We've seen no gains in home sales. And so I'm keeping my eye on that in the next few weeks. Overall, as I mentioned, we're on pace for just 4 million home sales in 2024. There are 367,000 homes in contract now. It's just a tiny fraction more than last year. It's still significantly fewer than 22. Remember, in 22, there were homes in contract in July and August that were deals that were getting done in June as rates were climbing. And so those were still in contract. And so deals fell. The total sales started falling in July. They fell again in October of 22. You could see how the sales in the second half of the year, we have more sales closing than getting started. So we'll see that trend you can see the pace for the rest of the year. 367,000 right now is really not showing any real gains for the year. If we're lucky and we do see some motivated, then we'll start to see a little lift off over the 2022 numbers, the 23 numbers. No sign getting back to 22 levels yet. That's really just a hope for 25 before we really see liftoff. The second half of the year, there's just not enough in the pipeline to see sales lifting off of that roughly 4 million level, unless there was some dramatic increase in demand. And really, you could think about it in rising rates can slow demand very quickly. You can imagine where falling rates takes longer to motivate demand to start. So it could be that maybe we get a little bit, but maybe we're looking at 2025. And it's hard for me to tell right now in the data. What I can see is there isn't super momentum happening there. Days on market. Homes are on the market 11% longer than last year at this time. It's 55 days across the country. It is significantly longer than 22, but it's 55 days is not that big a deal, but it is growing. It takes longer to sell a house. It takes in certain price points in certain markets, we can see dramatically more time on market. And when we dive into the local markets in just a minute, we will look at those areas. 11, I think the notable 11% more. The second half of the year, the days of market climbs. You can see, over the holidays, we get a spike, a lot fewer transactions and stuff sits on the market. Some people withdraw to relist in the spring. And then when you relist in the spring, that resets your days. So you get this normal seasonal pattern. So we're looking at 11% more. Okay, let's switch to pricing. Home prices, single-family homes. Prices are unchanged from last year at this time, $449,000, just under $450,000. And what we're doing here is we're measuring the market. So every home for sale in the country, this is the median price. So right in the middle of the prices. And so if I go to shop for a home today, this is what homes cost around the country. And it's exactly where it cost last year and 2 years ago. What happens is when you list a home for sale, you tend to cluster around the big round numbers. If you're going to sell a house and you think your house is worth $451,000, you're much more likely to list it at $449,000. And so a bunch listed 449 or 449,900, just under that 450 threshold. So it's very easy. So we get a plateau at that level for a couple of months before the fall hits, because now in the fall, if you're selling, you'd probably list it at a little discount. So the discount starts ratcheting down. So you can see this little plateau at 450 through maybe next week, maybe 2 or 3 more weeks before it starts to ratchet down for the fall. But the key here is that when we look at the homes on the market, we've had basically no price change for 2 years. I'll show you places where we have had home price changes and where we have had even price declines in a sec. And these are the asking price for homes. The sales price, interestingly, if you look at the numbers like the Case-Shiller index or the home price indicators where they're measuring the repeat sales of the same home over time, those sales are still showing price appreciation over last year. So you can see they're like 4 or 5%, 6%. And what this tells us is that, your house gets listed now, stays on the market for a couple of months, it gets an offer in August or September, it closes in October. This is a leading indicator for future sales prices. So I expect those headline numbers that you see, like the Case-Shiller, to compress from, say, 5% year-over-year gains into the 4s, down into the 3s by the time they announce the December numbers early next year. So this is really just a view of that in the future. So this is a different view than I've shared before. And let's bear with me while I describe what we're looking at here. This is the year-to-date change in the new listing. So we look at the cohort of newly listed properties each week. and that they are the cheapest of the year over the New Year's holiday. Then the best quality new listings come in and prices climb. We get the most demand and the best quality new listings. They climb in the first and second quarter. They peak in June, and then prices decline for the second half of the year. And so if we measure the change from January 1 to now, what we can see is this cluster of the pandemic years, 21, 22, 2021 and 22, had significantly higher price appreciation for the year in August of that year. And you can see where 24 is down at the bottom of that. So what this tells us is these are leading indicators, and you can see where this arc is going to go through December, and it come back down to about 0 to 3%, 3 to 5%. So it'll finish down here at the end of December. So these arcs come back down. And, in 21, this was like a 15% home price gain by the end of the year. So it was a significant gain. So you can see the other notable time here is 2019. In 2019, mortgage rates rose in 2018. Inventory rose so that 2019 started with more inventory because mortgage rates were higher than a year prior. The rest of 2019 was pretty flat in home prices because we'd had inventory rising. In 2019 finished just barely positive in home price appreciation. And so 24 is we're on the same trajectory as 2019. And so this is where we're forecasting 0 to 3% home price gains for the year. And so it's one of the factors where we can see how it's changed, the market's changed since the pandemic years. And the most close parallel is 2019, which had basically flat years. And 2019, we forget because we rolled into 2020 and all of a sudden, all of the attention changed. We forget that 2019 was actually a flat year for home price appreciation. So it's an interesting view of where we can see home prices going for the rest of the year. And these are the cohort of newly listed. So when you go to list your house, the seller and the listing agent, they know how many, you know how many people were at the open home, if there was a bidding war, if there's no offers, who's doing price reductions. And so it's a really fascinating, that price of the new listings is a wisdom of the crowds, they call it. And the crowds are the sellers and the listing agents who know exactly what's going on in their local markets, and they price the house to sell. So that's what that's telling us. As I mentioned, we are looking right now in the Altos data about 4%. This is when we look at the pending sales. So these are the homes that are going into contract each week. It's about 4%, 3.5% to 4% price gains over last year. And I expect this to keep compressing to about 3.5% by the end of the year, easing down. And so that means then the headlines will get to that number when you start hearing it in the spring of next year. So this is the change in the pending sales data. By the way, you can get the pending sales data from us. The data is now available if you are a subscriber to Altos. If you're a premium subscriber, you get the advanced analytics platform, and you can go get the pending sales data for your market. Click through there. There's a little upgrade now if you haven't already done it. If you're interested in tracking the pending sales numbers, the pending volume, the number of contracts that are starting each week, it's a very powerful leading indicator of what is selling. So you can go get that now if you are an Altos subscriber. All right. So let's look at the price change from last year at the state level. There are 3 states which are actually below last year's prices. That's South Carolina, Colorado, and Montana. Now, I should point out, you could see Tennessee and Texas are at flat year over year. Arizona's at 1% gain. In the range of plus or minus, say, 2.5%, it's basically flat year over year. So despite the fact that these are bright red, they're basically flat. In a given week, it could bounce, a percent because last year moved. So it's not, none of these are showing dramatic declines. They are showing flat year over year and a few of them slightly negative. Um, you can see the darker the blue here is the more price appreciation from a year ago. And really, that's the Northeast, New Jersey, Connecticut, New Hampshire, Rhode Island have the most price gains. And if you've been paying attention, these are where inventory has been tightest, where demand has been strongest. We've still had things like bidding wars in the Northeast. So there's a lot, you can see it in the price changes year over year. And as I mentioned, so we can, like it's notable that there are 3 states that are negative here. They're not very negative. They're basically read as flat year over year. So you could even read, South Carolina and North Carolina and Georgia are all basically flat year over year. But as of right now, you can see the red ones. So this is a new view that I'm sharing, and we're looking at the weekly price of the homes going into contract, the new pendings each week, which is, I think, a really powerful leading indicator of the actual sales that are going to happen. So that's the view on home prices at the state level. Let's do price reductions nationally, and then we will switch into the local data. So there are currently 39.7% of the homes on the market have taken a price cut from the original list price. And that's the dark line here. Each line is a year in this chart. And the key here to look is we're getting very close to this September inflection point of the last 2 years when rates jumped in September. You can see pretty much to the day price cuts climbed because rates jumped, demand backed off, inventory climbed in September, October, November, each of those years. We are hopefully on the opposite side of that trend this year. We are hopefully in August, September, October, going to watch interest rates decline for the second half of the year. And if that's the case, we should be able to track a plateau in price reductions and starting to notch down. You can see very quickly in the next few weeks, though, if that's the case, if we plateau around 40%, we'll have fewer price reductions than 22. Remember, end of 22, the brakes were on hard. And so if you'd listed your house in June and it didn't get an offer in July and then August, suddenly you're cutting your prices. If you still on the market in September and then rates jumped again to 7.5%, you cut your prices very quickly. Whoops. And so what we're hoping is we're on the other side of that, this year, and that we'll have fewer price reductions, and that'll set us up for a stronger beginning of 2025. They're still pretty elevated. There are a lot of homes that are on the market now with price reductions. There are, and I'll show you in a second where those markets are. But the key is not just the elevation number, but also the slope of that, like how much that's changing each week. All right, so let us shift to the local data. And we're going to start with the price reductions, the rank of the price reductions around the country. If you've been watching these, this is advanced analytics. You can get, as I mentioned, you can get your pendings data here. If you remember if you've been watching the webinars each month this year, you'd know that the Western Florida markets were dominating the price reductions most of the year. Suddenly, Austin is back at the top. Denver is in there. Indianapolis, Dallas is in there. Phoenix is in the top. So suddenly we have slower. We can see those Western U.S. markets slowing the same way they did in 22, where the beginning of 24 was really a story of the Florida markets. We can also see that, like, if we look at Austin, we look at that in 22, we could see 60% of the homes on the market with price reductions, 61, 62. We're 56% now. So that's weak even for Austin. Austin and Phoenix usually have in the 40s, but 56% is weak and is showing that maybe it's plateaued for the year, but we're going to keep our eyes on that. Denver is another. Denver has more inventory than in 2019. Colorado, as a state, as I mentioned, is about to shift to positive over 2019. And then I have a few other charts up. I've been watching Texas inventory. So Texas inventory Texas has more unsold homes on the market than any time in the lab, way back to 2011 now. And you can see in the seasonal pattern, the little dot is where we are in the year. You can see there's usually a few more weeks before inventory peaks in, say, October, end of September, early October each year. So a few more weeks of inventory climbing. Last year, it didn't peak until end of December there. This is a 90-day rolling average, so the weekly number is going to drop sooner than that. So we have a lot of those. Okay, so that's Austin. Let's look at Minneapolis. Minneapolis and the Midwestern markets have more inventory now than last year at this time, 4,700 to 5,700. So it's 28% more homes. But look at Minneapolis compared to 2019. It's still basically 40% fewer homes on the market than 2019. And that is why you can see there's still actually called a strong seller's market, because inventory is tight for the relative levels of demand. If we look at the price history in Minneapolis, let's look here, and we can see that maybe they're down a fraction over from the peak from last year. The beginning of last year was pretty strong, but still plenty of price appreciation in Minneapolis over 2 years ago when the brakes were already on. We can see the demand at the low end of the market, under 500,000 in Minneapolis. But what's fascinating is if you compare a Minneapolis to, say, Denver. So now let's look at inventory in Denver. The Denver's got 6,900 homes unsold compared to 5,900 back in 2019. So Denver is a market that is dramatically normalized. Denver is an investor heavy market, so you can understand that maybe the investor demand has backed off there. We can see. Let's look at the price reductions for Denver. So as I mentioned, Denver is now in the top 10 metros in the country with price reductions. 51% of the homes on the market with price cuts. But back in 2019, we had 49%. So not dramatically unusual for Denver, but still on the way up. And still, you can see in the last 2 years, peaked in November. And so we still have a lot more room to go for Denver. Boston has been among the hottest markets, so it's good to check in on Boston. So Boston, you can see home price appreciation, median price in Boston, 950 versus 929 last year. So you can see reasonable home price appreciation in Boston compared to some of the other markets that we're going to cover. The thing I think that's most compelling to know about the Boston data is anything under 800 grand is still going in a couple of weeks, and the 500 grand is 14 days. Like, you can see there's real demand still happening at these more affordable price levels. And even $3 million in Boston is still just 2 months on the market. Let's switch over from Boston let's look at Phoenix, and then maybe we'll do one more before we wrap up. So Phoenix has inventory back to about the 2019 level. 70% more homes on the market now than last year. And we have so we can look and see plateau in Phoenix, right? See the plateau in Phoenix. We can see in 22, this was the moment in September of 22 when rates jumped again. So inventory climbed again. And in 23, inventory kept climbing all the way through the rate climbs all the way into end of November of last year. Right now, we're in a much more plateaued level. So what this says to me is that those year-over-year changes are probably at their peak. Inventory is climbing last year, where it's plateaued now. So we'll start to see that compression where we forecast early in the webinar, I forecast that we'll end the year with only 20% more homes on the market unsold than a year ago. We're at 40% now. And so you can see how this compression is going to happen because inventory was climbing in Phoenix in the second half of the year where it's plateaued now. And I think we're going to see the same in Dallas. Let's start with the prices in Dallas. So you can see in Dallas, we have home prices were at 475, and this year didn't get back to the peak of pricing. We're at 470. So just slightly lower in Dallas than the last 2 years. So really home prices haven't moved in Dallas in the last 2 years. They are significantly up over 3 years, 4 years, 5 years ago, significant changes there. And let's take a look at the inventory levels in Dallas. So we can see now that Dallas inventory, 25,000 single-family homes unsold on the market in Dallas, up from like 21,000 in 2019. So, and this is not yet plateaued in Dallas. Maybe this week is a plateau, and we'll see over the next few weeks if that hits the plateau. Dallas and Texas in general has high property taxes that adjust really quickly. So if I bought my house back here in 2020, I've had even 2021, I've had dramatic home price appreciation. My taxes are up significantly. So even though my mortgage is locked in, I'm much more likely to resell a home in Dallas than I am in a place like California, where your property taxes are low forever. And so Texas has a much more robust resale market as a result, and significantly more homes on the market as a result. You can see in Dallas, the velocity is actually pretty stable across all the price points. Not significantly fast, even under 300K. And the ones closer to $1 million are still more, a little bit more, but it's much more even. And then let's finish up today. Let's do Portland today. Portland inventory is, so 5,300 homes on the market in Portland. So that's still significantly fewer than 2019, even though it's up over last year. So 4,200 to 5,300, that's 25%, 30% more homes now. And we can see in Portland, the high end of the market slower than the low end. And let's look at price appreciation over those years. We can see in Portland, so home prices still at their peak, up over 2 years ago, and significantly up over like 2019 time. So we could see a little bit more inventory in Portland. We can see prices have not adjusted down like they have in say Miami or Dallas. And if we look at the price reductions, we can see that 40% is normal. We're a little bit elevated there. But there's nothing in the price reductions data that says demand is weaker than normal in Portland. So, relative to the levels of available inventory. Okay, so those are the local markets. Like I said, I can not get to every market, but if you want to dive into your local market and talk about how to use the data with your business to help people understand how to buy and sell, what's happening in the market right now. If rates fall and demand picks up, your buyers are going to be slow to recognize that unless you're watching the data. So I want to recommend that you go get the book a free consult with our team. you can get the free ebook. So we have the free ebook. You can learn how to talk about the data in your business, use the data in your business. There'll be a link for that in the chat. Feel free to go get that. As always, folks, as I mentioned, the pendings data is available. I want to recommend that you go to altosresearch.com, book free consult with the team, talk about the data, get it in your business, help your clients, buyers and sellers know what's happening in the market right now. And as I mentioned earlier, we will have a recording of the webinar later today for everybody who is registered. So you can look for that in your inbox. All right, everybody, thanks so much for your time today. We will stick around in the chat to answer any last questions, and then we'll see you again very soon.